Markets have been in a better mood last week, favoring risky assets over safe havens amid reports that several countries were going to begin lifting up the restrictions they have to impose due to the coronavirus outbreak. Expectations for a treatment against the virus also fueled the risk appetite. On Friday, the US dollar fell by 0.03% against a bundle of its competitors to end at 99.08 and losing 1.20% for the past week. US President Trump accused the Chinese government on Friday of making a horrible mistake in its coronavirus response and of then orchestrating a cover-up that allowed the virus to spread around the world. US Secretary of State Mike Pompeo was even more explicit, saying that the coronavirus originated in a research laboratory in Wuhan, China, where the virus first appeared. However, that conflicts with the judgment of most virologists and of US intelligence agencies, which say that the virus was not man-made or genetically modified. There are also reports about the White House planning on imposing tariffs, which would put in risk the phase first of the trade deal that was signed earlier this year, a move that markets may not favor. Meanwhile, the British pound edged down by 0.7% in the final session of the past week against the greenback, to finish at 1.2504. Still on a weekly basis, sterling posted a 1% gain. The cable fell after the comments from the US President Donald Trump stoked fears of Russia trade tensions between the United States and China. Following the bearish Friday's close, the pound is heading for further losses this week. The Bank of England and market response to any details from the government's lockdown exit plan will set the trajectory of sterling. In the meantime, the euro traded in an uptrend last week, closing at 1.0985 on Friday. The common currency notched a 1.5% weekly gain against the dollar. However, this week the euro has reversed its gains. On the data front, IHS Markets PMI for the Eurozone sank to 33.4 from March's 45.5, its lowest since the survey began in mid-1997. This is significantly below the 50 mark, separating growth from contraction. The reason is government-imposed lockdowns to stop the spread of the coronavirus, which forced factories to close and consumers to stay indoors. In the crypto market, Bitcoin fell by 0.9% in the final session of the week on Sunday, partially reversing a 1.81% gain from Saturday. The benchmark cryptocurrency ended the week up by 15.61% to $8,899. Bitcoin sold off as investors anticipated the beginning of a new US-China trade war atop the market shaking coronavirus pandemic. Moving ahead, traders would keep a watch on the May 12th event, which will see Bitcoin's daily supply rate going down from 1,800 Bitcoin. Traders think it would make the cryptocurrency scarier and therefore more valuable. Elsewhere in commodities, oil prices have started to edge higher in the past week. Brent futures settled at $26.44 a barrel on Friday, rebounding from an 18-year low or below $20 a barrel the previous week. Brent posted a 23.2% weekly gain. Plant production cuts off up to 10% of global supply by OPEC Plus members took effect on Friday. Meanwhile, WTI crude for June delivery rose by 5% to settle at $19.78 a barrel. It looked at 16% weekly rise. WTI had bounced 52% in the two last sessions. Meanwhile, gold futures settled at $1,700 on Friday, posting a 2% weekly fall, the worst weekly performance in more than a month. The reason for the fall was the optimism generated by the lifting of the confinement measures against the coronavirus in several economies. A small rebound occurred on Friday after President Trump threatened to apply new tariffs on China, although most experts agreed that the price movement could have been exaggerated because of the low trading volume. As per the future, the US labor market data due to this week would keep investors on their toes. The figures are likely to show the US unemployment rate has risen. You are watching a weekly review of a currency and commodity market on InstaForex TV channel with me, Kate Stichina. We wish you profitable deals and see you later.